process. Investing is not something that happens overnight. It takes a lot of work, research, diligence, risk, proper management, broker advice, and all this is regulation. Very important. Before you invest, you need to be aware that regulation is to protect you, not to harm you.
True.
These are things we need to talk about.
Well, we'll be here for 3 hours and we still have the room full. So I think let's just have to wind it down so folks can go sleep for Monday. So everyone on Space Now will speak, but that's just going to be it. So we'll just have those speakers. Let's just start. Everyone's going to speak and then we'll just wind it down. I appreciate everyone. This is not this is not a sexy topic, but we have nearly 600 people that have stayed here night today. So AMP from Ethiopia, is that what I'm saying? AMP, go ahead. You got the floor.
Thank you, Kalu. Hi, everyone.
What's up? No, AMP speaking. Oh, everything, yeah, AMP. Everyone's going to speak. Let me just speak.
Yeah, I just want to go down and say.
Oh, I really can't hear what's going on. AMP, go ahead. Everything, you can't hear him. If you can't hear him, go out and come back and I'll add you back if you can't hear him. AMP, go ahead. Everything, go out, I'll add you back, yeah.
Cheers. I don't want to speak at the same time. Anyway, thank you, Carlo.
Your audio is falling low, AMP. Go ahead. Your audio is low.
Okay, I have my Bluetooth on, probably. That's
Go
why.
for it. Now I can hear you.
I don't know.
Yeah. Now I can hear
me.
Yep, I can hear you.
I'll just come back up.
I can hear you. Go ahead. I can hear you. Go ahead.
Okay, all right, cheers. No, actually, it was a really nice discussion. I don't know if you can hear me. Just let me know. So I'll just come back up. Anyway, the two questions, Carlo. Thank you. I see you. I went to Amazon. I see you the book and stuff. I didn't see no. I don't know if you did any audible version. I don't know. These people on the way, that would rather have this kind of stuff.
Yeah, Audible's on the way. We're working on it. Yeah.
Okay, cheers. That's nice. That would be nice. I like the cover, but at the same time,
very handsome, right?
I prefer. Cheers. Thank you. The reason I came up was actually I was reading one of your tweets and I see your China is coming up with $51 billion in terms of financing Africans, and I'm like, okay, and then you put up that number like they were poorer or not poorer, like they poorer than the entire African nations.
Yeah.
In the 1965, if I remember correctly. And we can go from as a country or as a continent. What are we lacking to see that kind of significant difference that we're still there and they are up here? So I just want to give me your, not an degree, the whole thing, but just what was your assessment? What was your what are we lacking as a continent or as a countries? Is it the people contribution to their own country and invest in their country, or what is it? Just give me an idea.
I got you.
That I can, yeah. And the next one is I don't know if you do have the time. If I can add one more question. So the next one is I've seen like you put up that 1965 still in my mind. I looked up the Nigerian Stock Exchange was established in 1961.
Yeah. And
now we're here, 2024, for like 56 trillion naira market cap. I'm like, okay, if you or anyone can tell me what's the population in Nigeria contribute to the how is it benefiting the people in Nigeria, or what makes it to that level? And the reason I'm asking this question is actually, it's been a long wait. We're having about to open up the very first stock exchange in Ethiopia, beginning of January. I'm excited. I stay in the States, but really, really interested to, invest in my country and stuff. But tell me, what was the contribution to the the contribution and the return to the population of the Nigeria having that exchange for the very long time. So I appreciate your time. Thank you.
Yeah, so let's take your second question first. If you look at the direct contribution, i.e., the retail market for Nigerians make up, I would say, Olumide can back me up here. The fund flow is, I would say, 50-50, 60-40 Nigerian and foreigners. The fund flow, which means that foreigners bring in money, but also Nigerians bring in money. But how many Nigerians are active in the stock market, i.e., have an account, are trading? Not a lot. Recently, we had MTN issue shares. Then we got a huge response, especially from Nigerian women. Nigerian women did a lot of investment in MTN because it was online and they were able to buy a lot of equity there. But it was very, very strange that Nigerian women were very, very, they were the top investors in MTN on that online share. But in terms of the retail market in Nigeria that people are buying and selling day to day, not a lot. But contribution, I would say there's been a lot of contribution because Nigeria has asked banks who are very, very large to list. Those banks listed, so lots of Nigerians have a stake in a bank because they were listed, right? And that, I think, brought a lot of investors to the market. That's one good thing they've done. Before those banks were listed, stock market was seen as something that people do on the side by a very, very small portion of the Nigerian market. But the biggest companies in Nigeria, the Dangote Cement is listed. The largest other companies, MTN and Airtel, are also listed. So there's this sense that in Nigeria, the rich people understand that they have to also invest in the stock market to raise funds. The Lumelu, Dangote. Olumide, do you want to also make a comment on that before we go to the China one?
Yeah, I wanted to add. So when he asked that question, I was kind of digging already. So this year, just 100,000, about 100,000 plus people were actively involved in Nigerian stock market, and the stock market is up by about 15.5 trillion naira, and just about 12 a dozen people are responsible for half of the profit. You mentioned Dangote, you mentioned Rabi, you mentioned Chimovia, you mentioned Tony Edumelu, you mentioned Peter at the Peter side, and that's basically it, So it just tells you that wealth is concentrated, among the very few. Many Nigerians cannot invest. Carlos spoke about foreign retail. It used to be that amount, but recently it's now basically 9 for every, if there are 10 investors, 9 is local, 1 is foreign. And pretty much because our stock market was downgraded by 2 multi-agents. So foreign investors are not really seen in our stocks like other markets like India. So it's pretty much a domestic. So that's the available data we have now.
So the summary is that, the summary is that it's a large market, but very, very top heavy. The top heavy guys are driving those transactions. You see those 15 trillion you are seeing. If you remove the bank capitalization, you will not see a lot of Nigerians in the stock market. I even think that number is even high because the bank sold shares. So there are staff, there are employees. IPO, when we did the bank 25 billion IPO, that's when a lot of Nigerians even looked at the stock market. So that's just the answer for you in terms of that, for that stock market side. Let's go to China. When I put 1960, I just didn't want to argue with me. If you go as far as 1970, it's the same indices that the Chinese as a country and as a people were poorer than literally all of Africa. Even if you go as high as 1970. I think in 1978, the Chinese were still suffering from famines. 78 or so. They were still suffering from famines. What the Chinese did well was that when they had this new president, I think it was Xi Jinping, I can't pronounce his name, the guy that went to Hong Kong, that Chinese guy, he went to Hong Kong, and China back then was a communist nation, 100% communist. So it was top-down planning. Chinese say, want to build a factory, they take and build a factory, end of story. There's no planning, there's no entrepreneurship, there's no capitalism, communist. But he went to Hong Kong, And when he went to Hong Kong is China, or was China. He saw the same Chinese people in Hong Kong, but they were richer. The same work ethic, the same food, the same culture, but they are richer. Why are they richer? Because in Hong Kong, they allowed capitalism to take hold that if you kill a cow, you eat the cow. So he came back to China and he said, okay, we're going to get one part of China, we're going to do an experiment. We're going to allow this part of China to be capitalist, and let's see what will happen. And he came back to China and he said the famous quote, it doesn't matter if the cat is white or black, as long as it catches mice. Which is to say, it doesn't matter if we call ourselves communist or capitalist, as long as the economy is booming and we're creating jobs. So they went to the coast of China and they created a place there that was what we'll call now a free trade zone. And in that place, it was not China. The foreigners came in, could establish a business, could use very, very cheap Chinese labor, and then manufacture goods and then export. So they kept it away from China. But what they did was to then ask the Chinese to copy exactly what the Western guys were doing and replicate it in China. But they built this up with a base of education. The Chinese went back and educated every Chinese man. So it's not just to bring in the Westerners, but they educated them, quality education. So the rural areas, you had kids there that were educated, well taught. Then they started the agricultural revolution from the rural areas, not from the townships. So if you lived in the village, you had food, you were educated. Where did you go to work? They moved them from the rural to the town, to the coastal cities, to go learn to do the jobs that the white folks brought to the coast of China. And then what they do next, they then created their own Chinese versions in China. So they copied what the Chinese were doing, applied the Chinese method of bottom up, and then built their own industries from China. And it was a joke back then, but they kept on learning, kept on being better, having 10-year vision plans. There was no politics of elections. So they have a 10-year plan. We're going to build a bridge over the river because we have a factory here. The bridge will be built. Right? They were going to do this, it will be done. There was no Democrats coming in or Republican coming in. It was the Chinese government. 10-year plans, and they focused on the quality of leadership. So before you can become a governor in China, you must have shown yourself as a local councillor, as a local government chairman. You have been tested and tried. So they didn't do this nepotism. It was you have to show what you have done. So only quality people led the country. They invested in infrastructure and education. They copied what worked from the coast, and they just built China. So it was a vision. China is a story of a vision that was implemented. That's the difference between China and Africa. Africa has better economic plans. If you come to Nigeria, we had the Nigerian Development Plan 1, 2, and 3. Nigeria was richer than China. The Chinese came to Nigeria to study. Back then in 1970, Nigeria had what we call overhead bridges. Very few nations on earth had overhead bridges. Nigeria had them. So we had a state called Lagos. We built almost 9 overhead bridges. You know what an overhead bridge is? You build a bridge over a road. Revolutionary. So you have 2 roads on the same geographical space. Nigeria had it. We had street lights. We had satellite towns called Festac. The Chinese came to Nigeria and because they couldn't go to the West because they were communists. They studied it. They went back to China and they started to learn how to build it. And over the years, they focused on an export economy because they had cheap labor. So they focused on what they could do well. They had cheap labor. The Westerners would come to China. We would learn. And they slowly released communism. So from having communism on the coast, they allowed the Chinese farmer keep more of his goods. The Chinese farmer then made more money. He could then send his son to the town to open up a shop. They slowly released communism. So the communist China became more capitalist, while nations like Ghana became more capitalist. Nations like your country, Ethiopia, became more Maoist and more communist. Nigeria became more socialist, where we had the military saying federal character and everything had to be move at the same pace. So China became more capitalist, Africa became more communist and more socialist and more Maoist. They caught the capitalism bug, became richer, built infrastructure, and haven't stopped. Africa regressed. Ethiopia went from having an emperor to Mengistu to the famines. Nigeria went from having the fastest growing region in the whole entire world that was growing in terms of economic output to then slowing down to a mono economy driven only by crude oil and gas. The vision, I think the plants that we had, the industrial plants that we had, we stopped them. We then started to focus on imports because we had crude oil. We were complaining that our problem was we didn't know how to spend the money. We didn't generate any more wealth. We just spent the oil money we had. If you fast forward this till today, the Chinese Communist Party still runs China, but the Chinese economy is 100% capitalist. In Africa, you still have portions, even in Nigeria, we're a democracy, but our economy is still not, should we say, capitalist. We still have government fixing of prices. We still have, the government will tell you cannot build a refinery here because it's, so with the vision we had in Africa, we didn't implement it. The vision they had in China, they implemented it. And that's where they are today. There is no magic. Rwanda has copied China. Have a vision, implement it. Same way Mauritius, Botswana. You don't have to copy China per se, but have a vision, implement. Doesn't matter who is in office. Trump is going to take over January the 20th. Whoever is the president of the United States of America, there will still be buses picking up kids to go to school. If you call 911, police will still come. If you go to the emergency room in America, the hospitals still work. That's the difference. Africa is still, if this guy is a good president, things are good. If this guy is a bad president, things are bad. We haven't institutionalized development. It's still personalized. So if we are lucky, like how Rwanda is lucky, they have a good president, they are developing. But the day they have a bad guy, look at Ivory Coast. For 25 years, Ivory Coast had a good president. So the Ivory Coast was the Paris of West Africa. Then suddenly they had rebels. And now they're going back to being the Paris of West Africa. So that's the difference with us. We've not institutionalized growth. Even Ethiopia, you guys are fighting a civil war. No one really knows about it in the world, but you are fighting a big civil war. You've gone from you guys are still the fastest growing country in Africa. But imagine if you weren't fighting that war. Imagine if you still had your port over there in Eritrea, where Ethiopia would be. Ethiopia is the second largest country by population after Nigeria. So you guys are the ones chasing Nigeria. And you would have even overtaken Nigeria, even not for those things that you have pulling you back. But you have no oil. And Nigeria has oil and we're struggling. So I could go on. But I hope you get the point I'm making.
Wow, thank you. I hope I'm audible again, but it was very detailed. Thank you so much.
You're welcome.
We're trying to know the current situation. Yeah, of course, if we don't have that kind of situation, I think it would be great, like you said it. But I've seen an article. I don't know if you see it by I think Goldman Sachs or something. The 50 years projection according to this current doubling down this GDP and stuff in the past 5 years. Say the 17 is place, the 17th place, Ethiopia. Yeah, I don't know if you see that one in the world.
You guys should not fall apart. You guys don't fall apart. You don't fall apart.
We were united as more than ever. Actually,
okay.
To be honest, I'm proud of. Yeah, I'm proud. For what we. All over the world.
All right, excellent.
Yeah, cheers. Well, that's what I want to discuss. Most people, would like to invest in and talk about the West or Asia or market or stuff, but we don't dare to go in details and share our intelligence.
Ethiopia is China. I'm not saying the derogatory way, but what Ethiopia has done with manufacturing and exports, how they have built this industry about when you guys do sewing and clothes for and manufacturing locally to export out of Ethiopia using Chinese capital is just amazing. But let's leave it there. Yeah.
I don't want to hold.
Gotcha. Yeah, want to get the space work. We're kind of shut down now. Let's get Mr. AM. Thank you so much. Let's get Mr. Chris. Good day, Mr. Chris, then SB, then Tunde. You're welcome. Hey, Mr. Chris, what's on your mind? Mr. Chris going once. Mr. Chris going twice. Hey, Mr. Hakim. Sorry, I said it's SB. SB, please go ahead. Then we'll do Hakim. SB, then we'll do Hakim.
Yeah, hello, good evening.
Hey, SB, what's up, man? Yeah, go ahead.
Thank you so much for the opportunity to speak on this
You're
space.
welcome, bro.
So actually, it's my first time of joining your space, and I've been glued since the first minute because everything I'm hearing is something I need to know. Even though I studied finance, but I've not had the chance to have a practical experience of investments. But yeah, I'm open to learning from the experienced ones. But yeah, from the previous things that you said about investments, I just have a question to quickly ask. Because you mentioned a particular type of investment for kids, and it sounded like it's a type that you can fund at different intervals. I don't know if the funding has to be fixed. You also mentioned one where it can be stated that the kid is employed and then the salary goes straight into the investment, right?
Yeah, I mentioned the US version, the Nigerian version. In the US version, we have what's called an IRA, Roth IRA. And I'm saying that's just an individual retirement account. So the way you do is that your kid has got to be legally employed. Let's say your child is 4 years old. Your kid can be a model. You take a picture of your kid, he's a model for your website. So you are paying him a salary from your organization, right? So you pay him a salary, but that salary doesn't go to the kid. It goes to his individual retirement account as a contribution. So your kid pays no taxes, correct? That money is then in that Roth IRA and then invested for the kid's life. He's from 4 years old till when he's 18. When he's 18, he goes to school. He can keep on working and investing in his IRA till when he's 25. He can then use that IRA and then take it over and then keep on working. So he's been investing for more than other kids would have invested. And it's a Roth IRA. Any growth in the Roth IRA is not taxable. After 5 years, your kid can withdraw the money without paying taxes. So it's a big hack. The same you can use in Nigeria. In Nigeria, you use the RSA version, Retirement Savings Account version. You can if you have a company, you can open up a company, employ your wife and your kids in your company as staff. Your kid can clean the office. Your wife can be your secretary. You pay them a salary, basic housing and transportation, which means they contribute to your IRA. That reduces your company tax that you pay. That ensures your kids have got a savings account that they start off when they are young, which they can use when they start to work. So you are doubling their compounding period from having a tax-free savings account secured by the government, by the kids' biometric. That's essentially what an RSA is, a tax-free long-term savings account. So you want to take advantage of those two and do it. That's the point I was making, SB.
Yeah, I really appreciate that clarification. But my major question is about that particular first type that I mentioned, where you said the money can come in at different intervals.
It has to be earned income. You can't just put money into the kid's account. You must pay him a salary. So you just can't say I'm contributing money to your kid's account. It doesn't work that way. He must earn. It's your child. You must have an employment contract. He is employed. That's why he earns the IRA, right? It has to be employment. Yeah.
Oh, so now I get it clear now, because I was even going to ask, what if somebody does not have a kid yet and you're interested in that kind of long term?
You can do that. If you can open up an IRA for yourself, you can open up an IRA, a Roth. So IRA can be traditional. It can be Roth. The difference is with a Roth, R-O-T-H, Roth IRA. Any money you put in, you pay tax today. But when you take it out, you don't pay tax again. So it's very, very good for you if you are younger, because you earn less, hence your tax is less. If you open up a Roth IRA today, you pay taxes today, then you use that Roth IRA and you then buy shares. If the shares appreciate in value, when you sell those shares, you pay zero taxes because you already paid tax when you open up the IRA. So it's a good hack for you. It's so good that the US government would stop you from putting all your money in a Roth IRA. You have a cap that you can put into an IRA. You also have an income qualification. If you earn more than, I think it's 180, I don't give you a figure, but if you earn more than a certain amount, you cannot have a Roth IRA. So if you're in the US, you want to ensure you have a Roth IRA and you max that one out first before you even start to invest. It's a hack. It's a big tax advantage. You want to take advantage of it.
Oh, thank you so much. I do appreciate that.
You're welcome. Yeah, let's get.
I'm definitely going to be getting your book as Christmas gift.
There you go. Buy for yourself. Buy for someone. Yeah, everything. Thanks for hopping back in. Yeah, everything. What's up?
I'm good. Pleasure. I actually came up. I've actually enjoyed the space. To be fair, I came up to give some of my own opinions as clarifications about the individual that came to speak about diversification for cryptocurrencies.
Okay.
I wanted to speak on that, and I also wanted to speak on MSTR MicroStrategy, as well as their strategy that has landed them to the QQQ. Probably maybe you saw that, or Lumide saw that.
Yeah, I saw that.
But before I go into MicroStrategy, I wanted to say that for me, it really irks me personally because I sort of understand the technical nuances when people say the diversification should involve crypto. MSTR, for example, is not necessarily branding themselves as a crypto company, but solely as a Bitcoin company. And I know that most people don't get the misnomer, but they lump all of them together. I just want to, for the larger audience, demystify that and let people know that there is a major difference between Bitcoin and the broad regular cryptocurrency, and also touch on your concern, which Kalu was that because of the lack of what is deemed to be regulations, most people are scared to somewhat going to Bitcoin. And I want to give the example of Michael Saylor, the MSTR chairman, ex-CEO. At the time when I was willing MSTR around August 2020, there were no FASB regulations or FATFA regulations or SEC regulations. So had he probably decided to wait for like the SAP 21 that now allows for accounting by institutions that want to use this treasury model, perhaps there might not have been, he might not be reaping the fruit of his labor this much. That's one. And then secondly, are you aware of any African institution / company using the MicroStrategy approach? Because I have somewhat asked this question as well to Lumide, that this is an open playbook that they've even open sourced their methodology and put it on GitHub for any corporate body / institution to copy. But so far, it doesn't seem like Africans are even aware of MicroStrategy. Now, I think in 2024,
everything we have to. I get what you're saying, but you have to let's. You have a question
okay,
there. Address it because
I'll land it there. Probably, can you just chime in on MSTR? Are there African approaches to MSTR?
I mean,
should we be looking at an MSTR model?
Is there even a US version of MSTR? No, because what he has done and what you can't replicate is that he has bought an asset at a very, very low average price. To do what he has done now is impossible because you can't buy Bitcoin at that low average price anymore. So he's now the leader, right? And if we can copy it but at a higher price. So if BTC now goes to 500,000, good, then we're. But he's going to be the leader because he has a lower price. He has a lower average price, which is buy the asset, hold, issue equity to pay back the debt. It's locked in. So he has won because BTC has gone up in price. You know that he took a bet. The bet has paid off for now. I don't think anybody else can match him because of the increase in the cost of Bitcoin. So we're looking at stage 2 now, which is for us. What does that mean for us as an investor in this space? Should we go buy BTC? Should we get exposed to BTC? That's now the question for us, because we're not going to do Michael. We don't have $90 billion. So again, that's what I'm saying. Yes, it's now a serious asset class. Yes, if you can think about putting it in your portfolio, the answer is going to be what percentage. Should you do 1%, 10%, 50%? The way I look at it is still this way. If you are younger, it should be a larger percentage of your portfolio. If you are older, you should try to reduce the amount of the portfolio that you have exposed to that. That's really where it's going to be. It's your concept of risk. If you want to take that risk, grab it. Everything is risky. So we're not saying BTC is riskier than any other thing, but everything is risky. But if you're younger, you can absorb risk, and it's an asset class that is still at the beginning stages. We don't know where it's going to go tomorrow. So I would say have it in your portfolio, but the number should be based on your objective, your age, and your attitude to risk. That's how I'll say it, really. Yeah. But your topic has to be brought back to a different, and then we talk about it. It's not something we just do in 5 minutes. Yeah. Hey, Menkiti, you've got the floor. I've got Menkiti, and we'll do Clinton. We're just going to wrap up, guys, so we can all go. Don't worry. Menkiti, then we'll do Menkiti, then Clinton. Menkiti, go ahead, please. Menkiti? Well, let's get Igala Man. Sorry, Clinton. Sorry, let's go Clinton and Igala Man. Clinton?
All right. I'm here.
What's up, man?
Good day, sir.
How you doing? What's up?
I'm fine. It's good to be speaking with you because it's been long since I've been trying to get here. So you and the Olumide have helped me in my financial journey here. So I'm good.
Olumide, I lost him. Can you still hear him? I'm not hearing you. Can anybody hear him?
Yeah, I can hear him. You can hear him. Okay. I said I just ordered your book from Roving Heights. So since Saturday, so I'm just waiting for it. And my question here is, I'm investing with Truth app. So, and the problem is that I don't have CSCS number. So, and I asked them. They said that I'm trading with custodial accounts unless I switch to individual accounts. And the thing there is that I will start filing my dividend. So I decided to just leave it like that because I just sense that filing my dividend might take me a lot of stress instead of getting it automatically. So that's the question I want to ask, because the reason why I put interest in this CSCS because Olumide was advising people.
Well, is it foreign stocks or local stocks? Foreign or local stocks?
Local stocks. That's Nigerian stocks.
Yeah, so really,
this year.
Yeah, Olumide is right now. So it just depends on what you want to do. If your CSCS means it's in your, like, if you are doing Bitcoin, like that's your own wallet. If you have your own wallet, yes. You buy, you put it there. You can still say they can do custodial for you, like they've told you, and it's maybe more convenient for you. It's your call. I always advise having your own CSS because then it's in your possession, right? But if you don't put in your CSS, it's not the end of the world, but it's your call what you'd want to, if you feel comfortable like that, because it's with them, right? Yeah, it's your call. They are correct, but it's your call. Yeah.
Thank you very much. The question here is that filing for my dividend, is it a hard process?
It's not.
It's not.
That's why I'm surprised.
You can go to the registrar and do registrar with, e-dividends. You can do e-dividends, Abi. Go to, give them your bank account. Yeah.
Most brokers even operate now, like what most of my banks, without even filing anything, just went to my bank account straight. You see, what you need to understand is that if your funds are not custodial and the businesses go bankrupt, man, sorry, you are your own. But if your fund is under, you just need to you need to understand. That's why Kaju said that you need to be aware of the risk. When you choose something, you need to understand the risk. And why we say risk, because when your fund is on the CS account, it's independent. It's not exposed to the fund. The bankruptcy of a stock market. It's not exposed to. So that gives you a form of security, and that's why I said that CSCS number is very important. In fact, when you want to move your stocks, that's what they ask you. Give, then you can check. So it's your own choice. It's your own choice.
Yeah, it's your call.
So,
you're welcome.
Thank you very much.
You're welcome. So let's get Hakeem, then do Paul. Paul and Hakeem. Hakeem, go ahead, please. Hakeem.
Hello. Thank you, Mr. Carlo. Can you hear me?
Yeah, I can hear you. Go ahead.
Okay. Thank you for all you have been doing on this space. My first time on your space. Mine is just a request. I really appreciate if the recording of this episode can be posted on your X profile.
Yeah, it's all episodes are posted on the podcast and on the X. So if you go to you see the podcast app, all episodes are there, all of them.
Okay.
So once we're done, it's being recorded. Once we're done, I'll put on the podcast link and you just go in there and get it. Yeah, no worries.
Excellent. Thank you. Thank you.
You're welcome. Yeah, let's get so that's Paul.
Yeah, thanks, Mr. Carlo. Thanks for all the educational insights.
You're welcome, sir.
So my question is around, the U.S. stock market, and so basically, when you invest in the stock market, particularly for residents and citizens, right, they have tax obligations, and then they can write off their losses in terms of getting some kind of tax rebates. But for the Nigerian apps, do we have those kind of obligations? I hear Bamboo, I hear Trove. How does it work?
I think it's almost the same thing. We talked about that. When you buy through those apps, there's you pay those taxes. There was a guy that came here and just said he was buying through Ireland to avoid those taxes. So when you buy through those apps, because the custodial settlement is happening in America, yes, you are exposed to those taxes. Yeah, the withholding taxes and all that. Or you do a W-8 and all that kind of stuff. But yes, you are exposed to them.
Okay, it's already built into, I guess, whatever stockbroker you're using. Okay.
Yeah.
And then my second is just a contribution. I mean, a lot of us learned the hard way. When I went into the stock market, initially it was all about buying individual stocks, and then we realized diversification is the name of the game. Getting into index funds and things like that helps to spread your risk. I would also recommend the Intelligent Investor, because you've preached it, which is the right thing to do. But for people that want to have the conviction of why you should buy the index funds, if you read the Intelligent Investor, it just gives you historical background on why the index funds outperforms. I don't know whether it's 90% or something of even professional brokerages. So,
yeah, that book is a very, very technical book. That's the book that Warren Buffett read and all those people read. I personally, you are right, but I would not recommend that book for just a lay of the land person. The book by Bogle, any book by Bogle, Bogle, is very, very good, because the concept that are in that book is basically what all the books say. Even my own book is taking concept from that book, but it's a very, very technical book. The idea is that even if you pull up the returns today in the US stock market, many fund investors will not beat the index. Warren Buffett says the best way to invest is to just buy the index. He says when he dies, he should just buy the index and put his money in there, right? That's what he says. So it's a very, very simple thing. That's why people don't follow it. It's a very, very simple thing. If you want to invest, buy the average, stay. You won't get the 100%. You won't get maybe the low, but you are average because you are buying all the stocks, good and bad. And you can even come in and say, okay, I don't want the index. I just want the top 500 stocks. That's VOO, things like that. But that's the point. The index gives you diversification at a lower price. Right, so
I think it's counterintuitive, because most people almost feel like you have to be doing something, right? So
correct.
To just stay in the index funds, I think it's that human arrogance where you feel like I mean, I should be doing something, and then
the ability to stay and do nothing is a super skill. Just to sit in a room when the markets are going up and down is that's 90% really of your investment success. Just to do nothing, don't look at the market. The stocks are going up and going down. See, these are news programs that are designed to get viewers. If you can pull up a map of the stock market in America from say 18 or 1900, it's just going up. You see up down, but it's just gone up. So there's war, there's famine, there's Gulf War, there's what, but it just goes up. So, but if you pull up the news tomorrow, you hear them saying, "Oh, this thing's going to happen." Blah, blah, blah. It's noise, right? So it's white noise. Look for a good company, buy it, reinvest your dividends, go to sleep.
And I guess that's why they say the most successful investors are the dead investors, right? They don't touch their portfolio.
You don't touch it, yeah. The index would correct for you. The index would take away the laggards and add the... Now MicroStrategy is in the index, and they must have dropped somebody. So I think Microsoft is one of the few companies that are still on the index, the Dow. Microsoft have been on the Dow for maybe 20 years. Respect that company. But many companies have left.
Yes, those are veterans.
Yeah, but many companies have gone. Yeah, many have gone.
Right?
With that?
You mean do 30, the index?
The Dow, yeah. Like only Microsoft, I think, has been there for a long time. Yeah, the rest have. It's very hard to be there.
Those have been paying dividend for like 50 years. Coca-Cola, P&G.
P&G, you can't wake up and say you are.
Yes.
So Tesla is a small boy.
Yeah.
All right, so thanks a lot, Paul. Appreciate you. Let's do Igala, Casey, and Tooth Fairy, and then we'll call it a day. Samuel, what's on your mind? Samuel?
I just wanted to go and...
Igala, go ahead, real quick. Yeah, shoot.
All right. Good evening, everyone. So, I just add to the part that we Nigerians don't invest much or finance much. So, if you remember 2016 during the MMM and the crypto buzz of 2020. 18 or so. So it reminds me that we Nigerians, we like the idea of money when it is fast, not the regular thing. Then I remember when I used to sell insurance in Lagos, I've met people like in Ladipo or Idumota, and you see a big businessman who does not have insurance, and if you tell him, he'll tell you, okay, it's a good idea, but if there is no incident, will they return his money to him? Like, it doesn't make sense. And these are the things that I think we should have more creators in finance in Nigeria.
Sure.
Like, a lot of us should create more because we don't have a lot of people creating right now in finance. Aside the two of you and Money Africa, right? The lady is doing a fantastic job. So I think we should just have more creators in Nigeria, in Africa, across board, because I think we are lagging way behind when it comes to anything money and finance. And also, I think the regulatory regime in Nigeria is just so horrible, where it is better we just have one regulator, where we have modules for insurance, modules for retirement, instead of the NICOM, the PENCOM, the everything all together. It's just a lot. So I think it's just one of those things. Then the last point is, from history, most of the banks or most banks in Nigeria, they don't communicate well when it comes to the product they offer. Like if you just go to any average bank in Nigeria now, you're going to see a lot of the product they have. They don't even recommend it to us. They don't even find a way to market it or talk about it. And we've reduced banking to just withdraw money, save, stuff like that. So I think it's just that thing. We just need to inform ourselves more, then we can just move ahead like in the next couple of years. I think that's just what I needed to add to this.
Good point, bro. Good point. Appreciate that. Let's get... So we still got Samuel, Casey, and Tooth Fairy. So Samuel, you ready to speak now?
Yeah, I'm ready. Good evening. Can you hear me?
Yes, I can, sir. Go ahead.
Yeah, good evening. I follow you and Olumide very, very often and well. Thanks for the information you've been dishing out to us. Yeah, so my question is, I'll say it goes to Olumide. I've been actually trying to raise my hand to speak since, but I've been having issues with my communication. So, it's just this question is just basically about, I would not say maybe the irregularities or integrity of the Nigerian Stock Exchange. Recently, GT Bank website was hacked, and some other time there have been issues about banks deducting money from people's accounts, but at this period of time, I noticed that these issues did not affect the stock value of these banks. Okay, but recently CrowdStrike also has CrowdStrike had this issue of a downtime on their system that affected a lot of businesses all around the world, and we see the effect. So it's like there is some kind of, I don't know, maybe an integrity check or something that has to do with clarity as regards the Nigerian Stock Exchange. So I want Olumide to actually speak about this. Maybe it's because I don't actually see how that GT Bank stock did not go down then.
I know where you're going to, and I think I've explained it many times, but I'll say it once again. So, you remember the indices I gave about the number of Nigerians that are active investors, right? About 100,000. That's 0.05 of the population. Do you understand? And if you look at the fact that the big players in Nigerian stock market are pension funds, and the major founders like Fola Jola, Jimmy Agbaji, the team management, FPI, Foreign, Dankote and Co., they are less likely to react to news like that. So you see, we tend to try to compare America with Nigeria. Americans are active investors. Now, data in America is a country of over 300 million people. 40 million Americans are directly or indirectly exposed to the US stock market. That's the difference in Nigeria. Even if you add the pension fund, how many Nigerians have pension funds? So if you add direct and indirect, it will take a lot to get 1.5 million. So you don't. I find it very funny and very sarcastic when people want Nigerian stocks to react based on news that they feel they should react. So this is, let me tell you, stocks that what GT reacted to. When the windfall tax came in, GT lost almost 15% of its value. UBA lost higher. FCMB, many of these bank stocks, and that was where many of us got into. So people need to understand that Nigerian stock market has peculiar reactivity, and the people that really matter in the stock, because me and you know that the people on social media are not the people that really invest, are not the people that are so liquid, because we tend to get carried away that because social media is shouting Nigerian stock market. No, it doesn't work like that. Nigerian stock market reacted windfall tax. They chose not to react. They believe that the fundamentals of GT is still strong, that GT makes a lot of money through the treasury and through channels that seems not to be affected. So it's a shareholder's decision, not the jury on social media to decide. So I find it funny why we need to take social media's reaction higher than the decisions of shareholders.
Okay.
Well said, Limited. Well said. The number is just too limited. Well said, yeah. All right, let's get Casey. Samuel, appreciate you. Casey, you've got Casey, then Tooth Fairy. Casey? Casey? All right, let's get Tooth Fairy. Tooth Fairy, hey, what's up, man? What's up?
Okay, hi. Good evening.
Yeah, good evening.
I'm fine. So I joined a bit late, so I guess maybe the question I might ask has already been answered, but I look forward to listening to the recording. So my question is this here, and I just started early in my career now, and I've read a lot on finances from Money Africa, from psychology of money, and all of that, and I've done a bit of investing myself. But then the question is this, and I feel like investing in Nigerian stocks, it doesn't exactly yield a lot for me, because when I went through my portfolio and I saw that I was really, I know in investing they say play the long-term game, but I just feel like the Nigerian economy is not really stable. and it will affect me in the long run. So I decided to move into maybe I more like I'm planning to invest into more into ETF and index fund, just like it has been advised in the.
Is it like local ones or like foreign ones?
That's the thing. I don't even know which to invest. I don't even know that there's an ETF for local funds that for local stocks now. So it's kind of like so confusing. Should I invest in the foreign? And if I were to go to the foreign route, I would obviously have to use this fintech app because I already have Chaka. I invested with Chaka in like 2021, so I stopped it for a while because I had like school and other things to focus on with my money at the time, because I know investing in myself is more important at the time. So now that I want to get back in, and I keep reading articles about how, hey, Nigeria is not so stable, you could lose your money, we're not really insured, and even though we're insured, we kind of like there's also just a lot. It's just feeling complicated right now for me, and I don't just know where to start from in the whole thing. Where should I go?
I mean, it's a great question to end the whole space. Really great. We can summarize really what we've talked about all through this space. I think the main thing is this, right? Whether you want to invest local or internationally, the first question has got to be, why are you investing, right? And if you get that out of the way, you're going to come to your risk profile. If you are able to absorb risk and if you're able to absorb volatility. Nigeria, the market in Nigeria and Nigeria as a whole, we have a higher volatility or higher risk profile than say the US or say the UK market. That's clear. So that means because we possess a higher level of risk, the return we should give you should be higher than the US or the UK, because we're asking you to invest with us, so we should pay you more because we have a higher risk, right? It just goes hand in hand. So what's Nigeria doing right now? About, if you invested all year to date, Nigerian all share index is about 35%. What's the US doing right now? I would say it's maybe even near there, right? So if you look at it this way, the risk that you get for investing in Nigeria, Nigeria is not compensating you enough to put money in Nigeria. That's what I would say, just top of the bat. But if you then go down the list and you say you want to invest in, say, oil and gas, it's giving you 160%, for instance. That's 160%. If you're doing insurance, 92%, right? If you're doing, for instance, which other one? Pension, 36%. If you're doing industrials, it's more. So the market in Nigeria is it's like polka dots. Some are small and big, some are big and small. There is no rhyme or reason, but in Nigeria you find germs that if you clean them up, those are like carbon that have turned to diamonds. So for you, it's simple. Can you take the risk in Nigeria? Because when do you buy a stock? When it's down. If you buy a stock when it's up, you don't make any money. You buy it when it's down. That's number one, right? Number two is, it doesn't matter if you're buying the individual stock or the ETF. It diversifies you better when you buy via the mutual fund or the ETF, because you're buying more with the same dollar. You are spreading your risks across the board, and you can buy more with less. So as a general rule, I would say you want to consider that, because how much are you going in with? So if you buy the ETFs or the mutual funds or unit trust, you're able to get more in that market with less. If you know if you have market information, maybe you work in a company and you think this company is going to go do very, very well, sure, you can go in and buy that individual stock on its own merit, right? Because you know, okay, I've done my research. I think Dangote Cement or Dangote Refine is going to be a 10 bagger. So I'm going to invest in that. That's completely okay. So you can do that. But if you simply want to, you are making income, you want to invest, you really don't know about these individual companies, you can't do the research, you want to spread your bets, you want to be in banking, energy, oil, insurance, ETFs, mutual funds, unit trusts offer you that exposure at limited cost, immediately. So that answers your ETF versus individual stocks question. We are back to the question of, should you invest in Nigeria? And I will say it's a difficult call. I can give you bad stories, I can give you good stories. And I would just say, overall, if Nigeria is a bad story, then you want to invest in the bad story today. If you want to take the risk. If not, you want to leave it alone and wait for it to get better, then invest in it, but you're going to pay a little bit of a premium on it. It's really down to your attitude to risk. But whatever you do, you must be invested. You said you have Shaka. Shaka already allows you to invest abroad already, because I think Shaka and Rise have this new partnership, and Shaka is already SEC registered to invest abroad. So if you go through Shaka, you can invest in a mutual fund, unit trust, ETF abroad, and diversify that earnings. So perhaps the answer would be to do a portfolio and say, okay, what's the bigger part would be maybe foreign, and there will be a small part in Nigeria. So that way you are eating in two markets, sort of like you do 80-20 or 90-10 or 60-40. Maybe that might be an answer for the Nigerian offshore market. But the key is to be invested. Don't wait till things get good before you invest. Invest, but have your diversification and say, I'm going to do this and this in Nigeria and foreign, and then determine if you're going to do your ETFs or your individual stocks. I like the ETF, like I said, because of the diversification and the cost. That's me personally. So that's easier to give you an answer on ETF versus individual. It's also easy to give an answer in terms of, okay, be invested. But Nigeria, US is going to be your call. It's your risk profile, it's higher. Think of doing Nigeria. It's not a basket case like that. There's just some good things there. So you have to do that. Spread it, I would say. Let Olumide maybe give you his own take as well. Then if you want to do it, then we can. Olumide, what's your take on that?
No, you said most of the things, Kalu, but just to add up, like, you just need to be aware of the risk. The US stock market is big, robust, efficient, liquid, but also has its own problems and challenges. Coming from Nigeria, you have to consider foreign exchange risk. Except you're earning dollars, you're definitely going to pay premium. Like I said on Twitter, you're not going to pay black market, you're going to pay fintech rates. Fintech rate is about 15% at least up your black market rate. So you have to consider those considerations. But the most important thing, just like I highlighted, is that you must start from something, you must learn. And I think, when we were in school, we started from 1 to 3, not from differentiation calculus. We need to understand the nitty-gritty of financial market, and the easiest place is where is the cheapest and most accessible place, and that's Nigeria. Whether we like it or not, most of us started from Nigeria. So you need to look at the fundamentals. It helps you broaden your knowledge about how companies operate, not just making money. You learn so many things, and it also builds your skills, particularly you that want to build your credentials in finance. So it makes you know companies, how they make money, who are the people that matter in the industry, who you should listen to, the importance of compliance, audit, all these things. They help a lot. Knowledge is not wasted. And before I shut down, I think you also need to understand that ETFs in Nigeria are not so liquid. What I mean by not so liquid, you don't see them readily available, so because not so many people buy them. But the best places to start is banking stocks. I said it because they are very liquid, and you rarely hear any Nigerian that say I can't sell this bank stock. You rarely hear. We have about 12 listed banks, and they are highly liquid. But when you start going down to manufacturing or tech, it's a bit challenging. But the Security Exchange Commission is really working on that to make market makers more efficient, but that's our challenges. Nigeria is not really a liquid economy. But, having said that, I'll still tell you that follow the money. The richest Nigerians are heavily exposed in the Nigerian stock market. With all people that buy black market, all the diasporas, based Nigerians, we've not really seen any that have done better than the guys that are heavily exposed in Naira. So you really need to ask your investment banker, what are these guys doing that you need to do? So, like Carlo said, business exposure, intellectual exposure is also part of investing, and that also broadens your tentacles in the industry. So I close with this. They say as you lay your bed, lie on it. The space for 3 hours, I think it's not just we
4 hours now.
jargons, but it was very, very educative. Different speakers, different people brought in their ideas. So it's for you to fine tune whatever works for you. It's not a place to look at who is right, who is wrong. It's a place for us to share our mind ideas, and most importantly, have the ability to discern information, because that's what is lacking in today's world. People don't even know what is right and wrong. People don't have the ability to research, to read, and for you to be a successful investor, like Warren Buffett would say, you must read as much as possible. Try and get Carlos' book. 18,000 naira, I don't think it's a big deal in today's economy. Try and please stop asking for a soft copy. It's a criminal offense to share soft copy on the internet. That's why when people ask some questions and I say I don't respond, it's because you don't want to send to jail. If the person sues me and you're not going to get a lawyer for me. So it's a criminal offense to ask for, because these books are almost free. So please get them. Thank you very much, Carlo.
Yeah, let me also end to do that. So in Nigeria, right, because when you buy, say, Vanguard ETF, you can create your own. You can create your own ETF. So what you want to do, like for instance, I'm looking at the list of ETFs in Nigeria. There's Stanbic, Vertiva, Meristream. Just get the one you want to buy. Look at what they are buying, then just buy what they are buying. So you can do your own. You can build your own. You can say, if you want to buy equities, right? I want to buy, say, the NSE 30. Go to the NSE 30. If you go to the Nigerian stock, you go to the NGX group. If you go to the NGX group, you see all the indices there, all the sectors there. So you click on that NGX. You click on the NGX banking index, and you look at what made up that index. Then just copy it and buy yourself. So in essence, you are building your own index, but you're not buying the NGX index. So that way you are buying the individual stocks, but those individual stocks make up the components of the index itself. You can also do that. It's like a hybrid, right? If you want to buy the premium index, you can say, okay, click NGX premium index, see the stocks that make up the premium, then just go buy all those stocks, and that becomes your portfolio, right? So you don't have to buy the index itself, but the individual stocks you bought are the premium index itself. You know what I mean, right? That's one way of doing it. So that way, if you say you still want to buy individual stocks because you want to get dividends in your name, you can do it that way. So if I'm buying, for instance, the pension bond board index, those are stocks that have paid dividends for 3 out of 5 years minimum. So I'll simply go there. If there are 20 stocks there, I just start buying those 20 stocks. But that means you have to have the liquidity and the cash to do that. So if I buy all those stocks, I've essentially created my own pension board index, essentially. And once I look at the returns here, I know what my own has done as well. But I'm not paying the fee to the asset manager. I just paid the fees once, and that's it. So that's another way of looking at it, yeah?
Okay, yes, that's very insightful, because that was the next question I was going to ask you about the asset management fee, because from what I've read also, that's why I read an article from an investor per se, like he came up with his own idea, and he said something about how he didn't like investing in Nigerian stuff because of the whole security and stuff. So he found platforms such as Trading 212, where it was like a UK broker house having to do that whole route of going through because of that. So I think since I do not have that liquidity to go that route with you. So,
you want to avoid fees as much as possible, because fees are what is the difference between you making a profit and a loss. So when you pay a fee, you are paying a fee from your principal. If you give someone 100,000, they're going to buy you shares, but they're going to take a fee from your principal. So if you look at the return with fees and minus fees, you're already making a loss, because fees have gone out of the window. So one of the key tricks of the trade is don't try not to pay fees, number one. Number two, try to reinvest your dividends. If you get a dividend from a stock, try to buy back the same, so that you average your cost downwards. So if I buy a share for 10 naira and I get paid 1 naira dividend, just give an example. If I use that 1 naira and I buy the same stock again, the same 10 naira stock, my cost no longer is 10 naira, it now becomes 9 naira. But the stock is still quoted at 10 naira. So already I've made a percentage return by just reinvesting my dividends. if I keep on reinvesting my dividends, I keep on driving my average cost lower and lower and lower to a point that my average cost can be 1 naira and the market is still at 8 naira. So while others are spending their dividends and when the stock goes to 8 naira, they are making a loss. Because I've averaged my cost down to 1 naira, even if the stock price goes to 8 naira, I'm still making a profit. That's why Warren Buffett can make that huge return he makes. He doesn't sell, so he keeps on reinvesting and averaging his cost down. He doesn't pay taxes because he's not selling, he makes no income. So by just the rolling over of those returns year to year, he averages his cost down. So when the stock price moves up in the market, he's making an oversized return on investment. So try not to pay fees. You can avoid it, but you will pay fees. But try not to sell over and over. You're just churning and creating revenues for your broker. Try to reinvest your dividends. Even if when you buy shares, open up a separate bank account. Pay all your dividends there. Even if you want to buy the same stock, try to capture all the dividends, the naira or dollars that flow from your portfolio. Try to capture it in a separate place. Don't use your dividends and buy Ashwebi. Your dividends are investment returns. They should go back to your investment. That way you are making your portfolio more robust, right? In America, they always have, what they call them, DRIP, dividend reinvestment plans, where you can click the button there. When you buy the share, you automatically can keep on buying dividend reinvestment. I always click the DRIP, always. In Nigeria, they don't have DRIP. So when you get the dividends, you have to take the dividend share back to the company and reinvest. So it's a bit harder for you, and you can easily use that money and buy diesel for your generator, which shouldn't be so. Try to separate your dividends, reinvest the dividends, grow your portfolio, especially if it's a very, very good stock, right? So that's two tricks of the trade.
Wait, one last question, please, before you go. Thank you very much. So, the next question I have is around this CSS number, and Clinton mentioned it here. So the thing is this: when I opened Shaka, I didn't get a CSS number, but then I went ahead and opened an account with Investor, I think. So yes, so I got a CSS number. So is there a way to link that? I know you it's like an account number for stocks where you just need one for life, but I haven't found a way to link that CSS number to Chaka in case I start reinvesting, because right now I do not have any investment again on Chaka. I just put it on hold.
Yeah, I think it's possible. I think it's possible. Link that right. You can just tell Chaka your CSCS and they link it, but then you lose the custodial. Because what Chaka is doing, Chaka has bought you shares with their own CSCS. So when they buy and sell, it's in their CSCS. The advantage is not bad. Look at the advantage of that. When you tell Chaka to sell, they are selling from their position. So that's why you can sell immediately and buy immediately, because it's on Chaka's custodial. If you move it from Chaka's custodial, you have to then move it back to their custodial or to a broker's custodial before you can buy and sell. So the custodial is just your PO box. So when you want to sell, you have to take from your PO box to the broker to sell. So there's an advantage and disadvantage of it. But if you want to buy and hold, if you're not a guy that trades, yes, have your own CSCS. But if you're a trader, maybe you might consider just leaving it there, because if you want to buy and sell, it has to be with the custodial purse to buy and sell. So it depends on how long you want to hold, your objective, all that kind of stuff.
Oh, okay. Well, I'm not a trader, I guess.
So I'm not a trader. Contact your accountant and say you have the custody. Can they move the shares to your CSCS? Yeah, you can do that. Ask them to move it for you. They'll have to get the physical shares, then they'll transfer it to your CSCS, then you just get one CSCS number, and the shares will be there. Perfect. It's not a problem. Yeah, it shouldn't be a problem at all.
All right. Thank you very much. I think I've exhausted all the questions I have. Thank you so much.
Excellent.
Thank you.
All right. Excellent. All right, guys. Believe it or not, we've been here for 4 hours. 4 hours and 10 minutes talking about investing, asset allocation. Boring topic, but I appreciate everyone that has been here. We're learning, making ourselves better, and I think everyone has left here with something new today. Of course, these spaces are all recorded, so once we're done, we put on the podcast. You can go back and read and listen to the podcast. It's called The Way I See It. It's also going to be on the Twitter recording, so you have You can reference back and basically listen to all those topics. Last week we did the financial health check, your income, your expenses, asset, liabilities. Now we've done the asset allocation, how to invest, and all that kind of stuff. I had hoped that the tax reform bill had been passed, but I've given you guys how to basically in 2025 how to set yourself up now to say, as this year is starting, this is what I'm going to do, right? I'm going to do this to avoid taxes, because tax avoidance is legal, evasion is not legal, right? So maybe next space is Christmas, but maybe the one after that we'll talk about how to then set yourself up in 2025. What should you do? Things like buying insurance for yourself and your wife to get a tax benefit, setting up a business, IRA, RSAs, things like that. Just how you want to set yourself up. Investing is also the structure. It's not just the buy, sell, but also the structure. If you are investing as a person and investing as a company, there's a difference. Warren Buffett pays less taxes than his secretary. Why? Because Buffett is investing as an investor. So when he gets his taxes, he pays on carried interest, not on income, not the normal personal income. But those laws are there, and you also can take advantage of them. So how you want to, it's not a legal space, but how you want to set yourself up, take advantage of certain exclusions, exceptions, and best practices. Maybe we'll do that as well. So that way you'd have done your budgeting. Now you know how to do your asset allocation. Then you now know how to set yourself up. So if you work for a company and you want to give charity, do you want to have a set up an incorporated trustee? If you want to buy shares, should you buy shares as a corporation or as a person in the US, in Nigeria, that sort of space. So maybe we'll have that, and you guys are all set up for 2025, then you have no excuse not to make $1 billion in 2025. Maybe that's our plan. Lumde, any closing words?
Yeah, thanks, Carl. Thanks for the opportunity.
I've kept you up, man. I've kept you up. I know this is what time is it in Nigeria? Who knows?
Yeah, I think it's the same time in Europe.
It's very. What time is it now?
It's 15 minutes to midnight.
It's 11:43.
That's time well spent. Time well spent. Yeah, excellent. Good job, guys. All right, guys. So we'll see. We'll talk, and then we'll come back next week. It might be Christmas. We might do something. I'll not be here. You guys enjoy yourselves. Stay safe. Stay safe. It's Nigeria. It's dirty. Whatever. Do not spend like the guys coming back to Nigeria. They're coming back with dollars, which is changed to naira. Don't spend like them. You have a budget for periods exactly like this. This is the period of irrational exuberance. But if you have a budget, you must have gotten aside some money for your quote-unquote irrational exuberance. Spend that. Don't spend more than that. Make sure you still maintain fiscal discipline. Don't spend like the Nigerian government. Maintain fiscal discipline throughout December so that you start off 2025. There's going to be school fees January 2025, right? So make sure you are making money and not spending money during the Christmas. That's your objective for next year. By next year, Christmas 2025, you want to be making money and not spending money in Christmas 2025. All right, folks, let you guys go. Thank you so much for being here. I appreciate you guys. Like I said, get the book. It will help you.
Thank you, Carlo.
You're welcome. Appreciate it. All right, folks. Olimide, Tutferi, everyone, thank you so much. See you guys. Bye.
Bye.